The stock market has just opened and we are seeing red right across the board. In fact, just over the last hour, trillions of dollars have been wiped off the stock market. And today's episode, we're going to focus on Nvidia. But when we take a look at the semiconductors in particular, not just Nvidia down, we also have Intel, Micron Technology, ASML, as well as many others. And in particular to Nvidia itself, as we said, it is down. In fact, coming up to around 10%, trading now below $100 at 97.35. And we want to understand what is happening with this company. Is it going to continue to fall, or should we consider adding this into the portfolio? Now, Wall Street still have this sitting at a strong buy, but before we look at the details of this company, let's just look at the wider market. Now, a few reasons for the overall sell-off that we have already covered, but at a high level, there is worrying anxiety in the market that we may be entering into World War III, as we can see a lot of stress around the Middle East and whether or not we will see Iran retaliate to the Israel strikes. We then also have Warren Buffett, who sold half of his shares in Apple, and some people do argue that is the escalated case for why the shares have dropped around 7% so far. And one of the major reasons is that the Japanese stock market is the biggest one-day drop that they have had and has ultimately led to the global market coming down even further. Now, again, we have discussed this just earlier today, but at a very high level for those who want to see or miss that episode, what we will just run through is one of the reasons why Japan has affected the market in a wider outreach today. First thing to note, for quite some time in Japan, you could have borrowed money at a 0% interest, reinvested it into equities with a nice yield or nice share price appreciation. So ultimately borrowing yen at next to nothing and then buying assets and getting a nice yield. So that would give you a nice profit. Bear in mind, this would only work if you were to have the three things that did hold initially: borrow rate remaining at around 0, the collateral retaining its value, and the asset that you did buy with the loan is making money. Now, unfortunately, all three of these things have started to unwind, which is why we have seen the wider market impact today. When we take a look, first thing to note, Bank of Japan did raise its interest rates last week around 0.25%. Previously, as we said, little or 0 to 0.1%. And we also note now that higher interest rates are placing a lot of pressure on the yen's value. Ultimately, you would have held foreign currency denominated assets against a yen denominated loan, and we can see due to this it has increased by around 10% over the last 10 weeks. So anyone that was in this position would have ultimately borrowed yen, now owns 10% more, as well at a higher interest rate too. The knock-on effect to all of this is ultimately that traders would have to sell those assets that they held and then repurchase the yen to buy back their loans. And what this does, it increases the demand for the yen even further, and then you get into that cycle which forces a lot more asset sales downs, and then the pressure continuing to increase on the yen, ultimately the liquidation cascade. Now, this is particularly around the wider market today. Our focus is going to be Nvidia, and one of the news that was released just yesterday was that ultimately Nvidia have reported a delay in their next AI chip, and they cite a design flaw being the reason for this. Now, supposedly Nvidia have informed Microsoft as well as one other cloud provider that the Blackwell 200 AI chips will take at least 3 months longer to produce than planned. Now, they haven't given an exact date, so there is a lot of bit of a worry going on in the market, especially with Nvidia investors worrying whether or not it will take longer than the 3 months and potentially affect not just the earnings report but also the subsequent earnings, where we have seen some very high expectations. Now, just as a reminder, in their previous investor presentation, they talked a lot about the different platforms that they will be producing, not just over the next year, but also over the next few years. And as we can see right now in 2024, it's Blackwell GPU. Over the next year, the Blackwell Ultra. So that is definitely one reason that we have a cause for concern, whether or not you want to attribute the massive drop today just solely to that or the other economic factors. That is something that we wanted to bring to your attention. Bear in mind, in a few weeks as well, they will be reporting their earnings, and the expectation is very high. 136% increase in the results from the same quarter last year, and do factor in over the next few quarters, massive growth is still expected. So if that delay becomes more than 3 months, or even if it just becomes 3 months, that could in some way, shape or form affect the numbers that we are seeing being projected, because ultimately the expectation is 371 earnings per share in January 26, and that will lead the forward P to come down to just below 28.92. A lot of people will say Nvidia will smash earnings, and look, that is a very real possibility, but just because they beat earnings doesn't mean the share price will climb. Just take a look at ASML. They had a fantastic earnings report. They talked about their bookings surging as the demand continues to increase, and we also noted when we looked at the specific numbers on the earnings per share as well as the profit, 6.24 billion versus 6.03, as well as the net profit of 1.58 versus 1.43. So ultimately, just because a company has strong earnings, we've seen it many times just over the last week. We had McDonald's, we had Hershey, both of these companies report a double miss, and they've increased in their share price since then. Lots of companies like ASML, though we have just pointed out, not having the greatest of performance after some very decent earnings. So something just to bear in mind there. And another question that we need to talk about is whether or not the AI hype will deliver, because what we need to understand is that a lot of companies are spending a lot of money on AI, whether that is spending it on Nvidia products or not. But what this article ultimately talks about is that whether or not it is just purely enthusiasm, or in fact it is generating a profit for the clients of Nvidia. As we can see here, very few companies other than Nvidia are actually generating direct profits as a result of AI, and for most, AI is expected to help drive profits down the road, but at the moment it is simply an expense as everyone ramps up their investment. So do bear that in mind. We will see more information, not just from when Nvidia report their earnings, but over the next few quarters when other large companies like Microsoft and Meta show whether or not they have been able to create those efficiencies by continuing to be one of the largest customers from Nvidia. Now, one thing we also wanted to point out, we always like to look and compare Nvidia against the 5-year average in terms of the forward P. Right now, this is what we call an undervaluation signal. 35.4 is the lowest forward P over the last 5 years, the average at 42.3. Now, we won't go into all of the metrics, but we'll just show them very quickly so you understand. Nvidia as a whole is a very strong company. We note the increase in the free cash flow over the longer term, expected over the next 12 months. We can see the sales growth. While we do note majority of the growth over the more recent period, we can see triple-digit growth just in 2024 and expected to continue. In terms of sales as well, we can see the increasing nature of their top line, which is expected given the high valuation as well as the very strong earnings reports they've had over the more recent quarters. ROIC as well looking very strong, 61% in 2024. Remember, that shows us that management are able to effectively allocate their capital. We note operating efficiency with the margins increasing over the last 10 years. We note free cash flow margin very strong continually over the 10-year period. And the main thing from this exercise is to show you that the net debt to EBITDA is 0 right across the board. It won't even take them 1 day to pay off all of their debt net of cash on hand. So always great just to run through any metrics for companies that you're interested, or just to refresh yourselves on companies that you do hold. Ultimately, what this company has done is produce some incredible results. Just over the last year, their top line is up triple digits. Their gross margin also up. Remember, high quality company, increase the top line, increase the margin. And we can see both their operating income as well as their earnings per share up triple digits. So the market will be very concerned with the news that they are delaying their latest chip, and to see whether or not we can sustain the growth that we have just seen over the last few years. Now, we also note growth pretty much every single quarter on the data center, which is one that the market will be looking at the most. They want to see that continued growth going into the next quarter, but also the total revenue. We want to get that trend continuing. As we can see on a quarter by quarter basis, they have produced some very strong numbers. Now, before we jump into the valuation, just to let you know that we have released our latest free weekly article. If you want access to this or any other articles, you can click on the pinned comment below and sign up and read straight away. Now, with this company, we do always run it through our valuation model to get to our intrinsic value, and this still hasn't changed. There has been no data that has come out from their earnings from any reports that would change that. So $140, Wall Street not too dissimilar at $143. They have upside of 43%. Now, how we got to this number, we're just going to run through now. But as always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. So we run it through the DCF model with the free cash flow year on year. Average growth at 94%. We've gone for 30%. Now we do have a low, medium and high. Remember that this number is based on the fact that it's lower than the average as well as lower than the anticipated growth over the next 10 years in the AI market, estimated to be around 40 to 45%. Based on the 30 with the discount rate, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get the equity value, divide by the shares outstanding, and we get that 140. Now that implies 40% upside given the drop we have seen today. For those that want to be more conservative, we'll show you for transparency. At 25%, what we can see here, $101, meaning that pretty much now is at its fair value. For those that believe that is way too conservative, at 35, we can see nearly double the current trading price, and that is nearly a 100% return. As always, you can click on the pinned comment below to grab a copy of this model and run your own numbers through, whether it's for Nvidia or any others in your watch list or portfolio. So what we ultimately do is add a margin of safety. We put 10% and execute on this if it meets our 3 golden criteria. That's a wide moat, strong financial metrics, and good forward-looking data. Well, look, if you believe that, it is a buy up to $126. Then we keep going till it's near the current trading price. And what we can see in today's episode, you are getting not a 30% just yet, although it depends whether or not it continues to drop today, but at least a 25% MOS with around 43% upside from Wall Street and their estimations. As we saw, they do believe this is a strong buy. As always, give us your thoughts in the comments below whether or not this is one you're looking to add today. Maybe you're waiting for it to go further down. And don't forget to click on the pinned comment, sign up to our free weekly newsletter. And if you're interested in stocks that we are buying and selling on a week-by-week basis, do come and join us in the Patreon below. As always, have a great day. See you on the next one and take care for now.